Okay, folks, welcome to Thursday Night Stock Charts Live. Welcome. Chin, hello, hi Bob and everyone. One of the tickers I put on the cloud, FGEN, has an FDA date of December 20th. Cool. Paul, hello. Okay. Good evening. I got my alerts out late tonight, so I don't have many people in here yet. Everything's behind. Okay, what we talk about on Thursday Night Stock Charts Live are, for the most part, how are the weekly charts looking? Are we setting up for a bearish close to the week, a bullish close to the week, neutral close to the week? We're going to take a look at the major averages, subsectors, and we'll arrive at a conclusion as to how we might want to position ourselves moving into next week. But as I always like to say, one trading day left to go. So we're going over weekly charts, but we've learned from the past that one day can make a big difference. So we're not drawing any final conclusions this evening. Tomorrow, 3:59 in the afternoon, then we'll be in a better position to draw conclusions. So the one chart I really want to talk about is the chart of the U.S. dollar. Now, we had a multi-day back-to-back rally, and that's done. I didn't think it was going to last. We predicted it was going to happen, but we also predicted that it wasn't going to last. So, 4-hour time frame chart. What happened today? Something very bearish, and that is we had broken out here on Wednesday. Consolidated very, very nicely. What happened? We failed to hold. We broke down. Not only did we break down below one support level, we broke down below the lower band of the prior trading range. Very bearish stuff. So we'll take a look at the weekly chart of the U.S. dollar. Why this is important is because what we like in general moving forward are emerging markets. When emerging markets do well, you'll normally see the U.S. dollar in decline. Why? Their debt, which they have a lot of, is denominated in U.S. dollars. Commodities are priced in U.S. dollars. So what do emerging markets produce a lot of? Commodities. So they're getting paid more for what they export, and they're able to pay down their debt with dollars, and they're able to manage their economy far better. They become far more attractive to capital. And we also like gold, silver, the miners. Let's get to it. Weekly chart. Larry. Okay, another holiday sale. Great. The chart I want to begin with is the TLT. This is the 20-year bond. We always look at the bond market first because the bond market is the tail that wags the stock market dog. I say that constantly because it's so important, so true. So what's going on in the bond market? We're seeing money rotate into bonds. This comes after a week, last week, where it was horrific price action. Bullish for stocks, bearish for bonds. This week, bullish for bonds, bearish for stocks. So at current, we are breaking out above prior support, now resistance. We don't know if this is a breakout yet. One trading day left to go. We'll know at the end of business tomorrow. So we're not drawing any conclusions. All we're doing is a pulse check, right? Where are we at? We're doing our due diligence. Bond yields, I should say. They're down on the week. An inside week, no new high, no new low. But these indicators are threatening. Very, very ominous. We're putting in a higher low on stochastics. You don't trade off of this only. All right, this is just as I always like to say, the market sends you signals. Right? You take those signals, you make note of them. Right? This is what I do. I make a mess of my charts. Why? Because it pays dividends. Here, I take note. There's my note. Note to self. Watch. This is bullish stuff. Higher lows, threatening to break out on Stokes. RSI, we're already there. Higher highs, higher lows. The only problem is that we are not seeing price follow through. We may get it tomorrow. It'll be a big move to overcome the highs of the week, but it can happen. Or we trade sideways and then resume the uptrend next week. But I believe that yields are going up higher. They're sending us every bit of signal that they can. And you might be saying, wait a minute, whoa. We have the Federal Reserve printing money. We have a stimulus package coming out. Yes, all of that, yes. The charts are telling us something different. They don't care. Yields are going up higher. They've been going up higher for months now. Yields have hit all-time lows, yet bonds are breaking out. I don't make the rules. All we do is take note and we get ready. I want to talk about the yield curve. I spoke about this with folks, I think on Sunday night. And the yield curve continues to press higher on a monthly basis. And this is technically or usually a bearish sign. Let me rephrase. The yield curve is not moving up higher. It's steepening. It's steepening. And usually that does not bode well for stocks. So we're getting indicators by the market that, stocks may be doing all well and good, but beware. We have warning flags on the track. Where's my quarterly chart? There we go. Here's a quarterly view. We are flirting with major resistance. And if we begin to break out, my guess is at some point in time, because you can see in years past where the yield curve is steepened, the S&P 500, which is in blue here, overlaid, goes the opposite direction. All right, so watch for a potential breakout here on the steepening of the yield curve. This is two-year bonds versus 10s. Tips. Treasury inflation protected securities. I haven't taken a look at the inflation numbers today, but I heard they came out hot. And the chips broke out. To be fair, the chips were putting in all-time highs prior to today. So today was just icing on the cake. This is going up higher. But there's no inflation, folks. Federal Reserve's not happy. We need more inflation. That's what they tell us. That's why they need to keep printing money. No, it's to keep the stock market up. That's it. Look no further. It's the greatest transfer of wealth that we've ever seen. The U.S. dollar. This doesn't look updated. Now it's updated. Okay, so the U.S. dollar remains up on the week, but we are on very, very, very thin ice. We are threatening to break down below 90.47 on the dollar index, the Dixie. If we break 90.47 and close there, we're coming down to an 80 handle on the U.S. dollar. What's going to happen? Gold, commodities, they're going up higher. What does that mean for you at the gas station? Get ready to dig deep. The Vix Weekly Chart. The Vix is up. We held support last week at the 20 mark. For those not familiar, the Vix is the fear index. Fear is building. We are consolidating. We have stopped going down. It's the first thing we look for to see if there's a potential for a trend reversal. We have that. And what we're setting up for here is a W formation. Here's your left side of your W. Pivot point, 41.16 is a center point, pivot point. Get ready for a building of the right side of the W. And do I think that this is going to happen prior to the new year? Probably not. I'm not being doom and gloom here. My head is already into January. So when you hear me speak, I'm thinking already past the holidays into January. The Dow transports, they were higher on the week. They have since reversed. We are now negative on the week slightly. New all-time highs this week. And they could still close positive. We're only down shy of a half percentage point. What did they do today? Pulled back. Closed off the lows of the session. Technically broke trend. Down volume was light. The Dow Jones weekly time frame. Very extended here on Stokes. You can see where these Stokes are at. Relative to prior peaks, we're right there. So I suspect that even with a deal, suppose we get a deal, stimulus, what happened prior to the election was that the media, and for once, I don't blame the media, they were just given numbers and they ran with it. The media was told that the number was going to be on or about 1.8 trillion to 2 trillion. Now we're talking less than $1 trillion. So that seed has already been implanted in the heads of traders. 2 trillion. 2 trillion. Not taking that away. I don't think $1 trillion is enough to keep this party going. We're pushing on a string to keep this market moving up. And we're going to come in $1 trillion shy of what's been implanted into the minds of traders. Not much talk is going on about it. We know there's going to be a deal, yet the markets are already weakening. I believe that much of what we're seeing so far in terms of any demand or any market improvement, a continued market rally has been priced in. They pulled it forward. It had better be a big number. Anything lower than $1 trillion, it's sickening. It's sickening. You think $1 trillion is a lot of money. Unfortunately, nowadays, it's not. S&P 500 weekly time frame. Down on the week, over 0.75 percentage point. How's our volume? Volume set to roll in below average. So not horrific volume. The indicators still look strong here. Let's go to a daily chart. You know, a down day, but certainly not a horrible day. Volume dropped down below average. Yesterday was a distribution day. I will point out, Stochk RSI is very, very weak on most all of these charts. Very, very weak. Lower highs, lower lows. Stokes are very extended and rolling over. I'm just not getting the warm and fuzzies here. Small caps, very extended weekly time frame. They are up over 1.5% on the week. Remember, these are the most heavily shorted names. So they went to these to keep the party going, squeezing the shorts. So we're trading above the 2 standard deviation Bollinger Band for what? 1, 2, 3, 5th consecutive week. Up volume is dropping off. Granted, 1 trading day left to go. Check out a daily chart. It looks as though we're going higher. The reason is that we made a new daily low today. And what we were able to do was to flash a bullish key reversal bar on the day. This is very bullish. Now, when you look at a chart like this, you know, there's when you're doing this for a while, you look at a chart, and it's like, you kind of get where it's probably going to go next. It's a fairly bullish setup. If we wake up tomorrow morning and we take out the lows of today, like we gap down, that's probably the beginning of a major sell-off, because usually sell-offs begin when you have a fairly good setup. It looks like we're ready to move up higher. We're good to go. And all of a sudden you wake up, boom, they take out those lows. So beware here. It should go higher. If it doesn't, look out below. We have trouble. Banks, inside weak. We have bond yields pulling back. That hurts their NIM, their net interest margins. It puts pressure on their profits. That's why the banks are down. They were up. Now they're pulling back. Meaning they were up last week, but they were very extended. They needed a rest. We sold our bank trade last week. That was the FAS trade, the leveraged ETF. But it looks as though today's price action looks pretty good. A reversal bar. We should head up higher here. This should be support. We should see a breakout. If we fail to hold this, it's not good. So beware. We've been slowly but surely taking profits on our longs, raising cash, and building on short positions. The Tues weekly chart. A down week, but on very, very light volume. Daily chart. For disclosure purposes, we are short of the Tues. We broke trend yesterday. Bullish key reversal bar today off of the 20-period moving average. Volume to the upside today was very low. So what we saw was a series of days, the beginning of the week, end of last week, where we were up, and I was warning, watch out for the volume. It's declining sequentially. It's not going to end well. What happened yesterday? Big distribution day. So beware the Tues. Semis, down week. How much are we down? 2 1/3%. Volume's going to roll in light. Very extended on MACD. I said it was extended back here. Now, my God, it's so extended. I just want to take a look at a monthly time frame. Very, very extended. RSI in a monthly time frame is above 80. On an individual stock, I wouldn't think that much about having RSI above 80, but we're talking about an index. Look at this volume. You know, granted, we can't consider December. We're just beginning December. But look at the volume bars dropping off to the upside. So we're putting in all these new monthly highs, but on ever declining up volume. Warning flag on the track. I mean, if you don't have institutions stepping in to buy on the way up, they're certainly not going to buy on the way down until we get to oversold levels. So, warning flag on the track. Let's go to a daily chart really quick here. An update today, but meh. I mean, a little bit of a fade. We flashed resistance at 2150. Volume was light. Biotech's ripping. Man. Very extended. Look at this rip higher on very light volume. This will not end well. But it's probably going up higher. Outside reversal bar today. In Fuego. Energy. Really good week so far. Clearly expecting a big stimulus deal. Daily chart. Higher highs today. Looks like we're going to head up higher. Good volume. Good volume. Oil. New weekly high. Volume is okay. Really nice ultimate oscillator. Higher lows breaking out. All your indicators look rock solid here. This is the gold mining index. A rough week. Let's go to gold. First, let's check out GDXJ. Bearish reversal bar on the week. Okay, gold. Bearish reversal bar. Very light down volume. Not a good chart. I mean, not pretty. We were above the 1850 mark. 1850 was very good support. It's now going to act as resistance. Look at how much time we spent bouncing off of 1850 before breaking the week of the 23rd. So as long as we keep this risk-on environment for equities, and we're waiting for this stimulus, this joke, expect weakness on gold. Once the deal hits and the dollar breaks, and we've seen 80 handle on the dollar, meaning the dollar index, Dixie, DXY, watch for gold. It's probably just going to go like this, straight up. So I'll be watching for an opportunity to add more to our gold mining position. Silver. Speaking of silver, this is the AGQ, the ProShares Ultra. Bearish reversal bar. Let's go to a daily chart. It's just waiting. It's just waiting. Let's update this. So what we're looking for is a pullback to support or a breakout, and then we're considering add more when the risk reward is favorable. I don't want to buy it in the middle of a trading range. We're already long of it. I want to add more, ideally on strength, on a breakout. And that may not be until January 1 or the beginning of the year, the new year. Uranium. We remain long of uranium, but we booked profits on half of our position earlier in the week, right near the high. It was above $14 per share. It's still extended. I like it. I want to buy my position back. It did pull back. As a matter of fact, I think it rallied again today. Yeah, good day. Very strong. I need to see the weekly overbought levels on the third standard deviation Bollinger Band. They need to level off a little bit. Maybe next week we'll revisit it. We'll remain long of what we have so far. But uranium longer term, I think, is going a lot higher. Emerging markets, of which we remain long of, doing well. This is what, a weekly chart? Recaptured our gains. Brazil, we're no longer long of Brazil. We sold Brazil yesterday and it moved up higher today. I thought it was going to pull back. It didn't. But we made little over 29% on that trade, so we're good. But it looks as though it wants to go up higher. As long as commodities move up higher, Brazil should move up higher as well. All right, let's go. Let's take some chart requests. We have some time here. I have a bunch to go over from members. I have SKT, Disney, Twitter, Cars, CARS, FGEN. What else do we have here? Oh, I got that channel. Yep, FGEN, got it. VET for Joseph. Big Bear. You got it, buddy. All right, let's do this. You got it, Jenna. All right. Okay. SKT. Interesting. Let's begin with the monthly chart. This line here in yellow is a volume weighted moving average. It connects the prior peaks. So this is going to act as resistance. But it looks good. There's your breakout weekly chart. Very good. We broke out the week of the 20th, pulled back this week. We can call this a retest, close enough for government work. And we have a continuation move higher. Looks very good. Daily chart. Outside reversal bar today. I think it goes higher. Yep. Oh, folks, I'm using TrendSpider, 35% discount code below. Use that link down below. And one feature that they have is this, seasonality. And I'm going to want to take a look at the analyst ratings in a moment. Why does this only go back? Yeah, there's more data than this. Let's go back to 2000. All right, so for the month of December, it's up 57% of the time. It drops down a bit in January. Be warned, in February, it tanks. That's over 21 years. This is 11 years. It's improved in the month of December and in January and over the past 11 years. So you're good to go here. I think this moves up higher. Now, what I like about this feature is this. I don't care about an analyst putting a buy on a stock. I could care less. What I care about is the ratio of holds and sells, which are the same in the analyst world, relative to the buys. And you have a tremendous number of holds and sells, but with no buys. That is a contrarian indicator. Now, what I like about this, you may be saying this guy is nuts. Everybody hates this in the analyst community. That's why I like it. Because if you're seeing price action going in the right direction, and you have a bunch of analysts that all of a sudden they wake up one day, they just got back from Aspen after their holiday skiing. Well, all of a sudden the stock that they have a hold and a sell on is getting away from them. They're missing the upside. So they'll flip to a buy signal, and all of a sudden you have the analyst community taking notice of, okay, stocks are going up, sentiment's beginning to change, you should be already in on this trade in advance of that occurring. So this is a tough sector right now. However, that's when you want to buy stocks, and when times are tough and at their bleakest. And right now, it's pretty goddamn bleak. SKT, I like moving forward. Next symbol up is Disney. Very good price action on the month. We've broken out. Will we close here? Not quite sure. Weekly chart. New weekly high. It appears as though it's going to move up higher. Daily chart. Good day today. Just keep in mind that, what do they add here now? Oh, they added more functionality. I'm not even sure what the heck this is. All right, cool. I'll play with that later. Keep in mind that you have, this is the power of automated trend lines. I take it for granted now. I hardly even talk about it. Click of a button, automated trend lines. So keep in mind you have resistance immediately above. So if I was so inclined to buy the shares, I would do it two ways. One, on a breakout. We'll keep that active for 5 days. That's scenario number one. Scenario number two is if we happen to pull back to a support level and we retest support. And we'll keep it active for 5 days. Seasonally strong period of time. But keep in mind, this is like a year of like none other. So, keep this, it was 91% last month, 73% this month. Very favorable. Drops down a little bit at the beginning of the year. So a pretty good period of time to be long of Disney this time of year. Looks good. Twitter. All right, Twitter. I was just about to bash it, but it looks like it's going to go higher. All right, I'll keep my comments to myself. Twitter is probably one of the stocks that I want to short the most on principle, but it's horrible to trade that way. So I'll wait for it to become overbought and ridiculously expensive. But right now, we want to take our opinions because I've never seen a company do more to damage their own brand. But you know what? What I think doesn't matter. The shareholders are happy. They're buying the stock. It's going up higher. Monthly chart, very strong. Weekly chart, take note. Again, I'm going to take off the trend lines, or the resistance lines. Here you go. You have a lot of resistance above. And we've been rejected there not once, but twice before. So keep in mind you have overhead supply immediately above at around, let's call it 52.75. Daily chart. Huge breakout today. Huge. Seasonality, let's go back as far as we can. Only 7 years worth of seasonality. Keep in mind, this is only 7 years. So December is an okay month. January is a monster of a month, up over 80% of the times in the month of January. So it looks like we have a lot more upside to go here. So Twitter, kills me to say it, looks like it's a buy. Cars.com. Interesting. Used car prices dropped down in today's CPI report, and the shares still did very well. We have a very nice breakout. We broke out here, retest 1, retest 2, continuation move up higher. Very nice. RSI looking good. Weekly chart. If we close out the day tomorrow above this resistance level, it's really nice. I would like to see as a good entry point a retest the following week. Keep a little bit of sensitivity on there. A retest of support. Thank God for spell check. Touch, bounce, good. We're good to go. Set it and forget it. Daily chart. Nice breakout today. That alert may fire off tomorrow, but I'd really like to see it retest next week. Pull back next week. Because that means that you have a weekly breakout, not just a daily, but a weekly breakout, which is significant, far more significant, 5 times more significant than a daily breakout. So we want to see a retest next week of this support level, and that's your all clear to get in to the trade. Now, if we fail to hold the support level next week, then you stop out. Small risk and small loss, lots of upside potential. So cars looking good. You guys are coming up with some really good charts tonight. FG, EN, Fibrogen. Now, I think Chinner said, hey, Anthony. I think Chinner said that there was news on this one. I don't know if it was after hours or what. Let's check out the after hours price action. Okay, not much happening here. Do we have news? No news today. Okay, so let's go to a monthly chart. All right, so we have a potential or probable higher low. It's trying to break out on a weekly time frame. It's struggling here on a monthly time frame. Monthly time frame. Weekly chart. We broke out last week. We're doing a retest this week. I think that if you're itching to put a trade on here, you could do it. Just use a stop loss right below last week's lows. But we broke out. We're pulling back, retesting. Very good price action here. You may be saying this guy's nuts. It's a bearish reversal bar. What doesn't he get? I think that what we're doing is we're seeing a retest. We see it all the time. All down weeks are not the same. Is this in and of itself a bearish candlestick? No doubt about it. However, where are we finding support? We're finding it at a prior support level, which is good stuff. So it's looking interesting. Let's go to a daily chart. I would not get heavy in the position right now. See how we bounced off of support today? I manually drew these lines, and it bounced off of that support level. So I think this could be bought. Nibble now, make sure it holds. Then when you begin to break out, then you add more, because then the market's validating that you are accurate in your call. So it's not a gorgeous chart. It was pretty back here. It's not pretty right now because traders are OCD. The psychology of these guys is that, this stock has had some rough times. And what they want to do is they want to validate that what was resistance for a long period of time is now going to act as support. Simple as that. So it should hold. I think it will. If it fails to, then avoid the trade like the plague. If it breaks down to new weekly lows, I would avoid. Chinner, it's an oral drug that will compete with EPO. To me, that goes in one ear and out the other. You're far smarter at this than I am when it comes down to what their business is. I'm not in the boardroom. I don't know what the decision makers are saying. All I could do is look at the charts and interpret what the analysts are doing with the numbers that they're being provided, with the inside information that's being provided. And that's how I trade it. You're welcome, Chinner. Vet. Another good-looking chart. We have a monthly breakout. Is there a ticker symbol for CPI? You mean the Consumer Price Index? There is for the CPI on stockcharts.com. I can get that for you. I don't know about TrendSpider. I haven't looked it up. Let's check it out. No. Not that I know of. But there is on stockcharts.com. Before I go into Valerium, let's get that, because I will forget. CPI. It's probably $. $CPI. Yeah. It's seasonally adjusted, though. I just dropped a link in there for you if you'd like to take a look at it. Okay. Back to VET. A monthly breakout. Very, very nice. Weekly chart. Look at this beautiful Bollinger Band squeeze. Very tight neck. We have a continuation move higher this week. Daily chart. Very nice day. When you get a bearish reversal bar like you saw yesterday, then the next day just plows right through it, that's money, man. Seasonality over the past 10 years. December's the second best month of the year. So it looks like VET is going up a lot higher. I like it. PRPL. Purple Innovations. Ooh. Bullish candlestick today. All right, let's first do our due diligence. Go higher level. All right, so you can see that we had broken out, hit resistance. I think we're going up higher. Just keep in mind that you have a resistance level at current at around 30, rounded up, $35 a share and rising. Now, what we did this week is we bounced off of the lower band of the rising uptrend channel. Very nice. Daily chart. I love me a good outside reversal bar, the bullish reversal bar. Very nice. I think that we may get a higher low. Let's check out the Stokes. All right. If you're going to open a position, I would stay small here because typically when you have Stokes that are down below the 20 mark, they're bottoming out. It's a process. So while today we had a very good bullish key reversal bar, keep in mind that there's no real momentum yet. One day doesn't make a trend. So you could get an inside day tomorrow. I'm okay right now with putting on a trade, but I would stay small and wait for these Stokes to begin to hook up. Like you saw back here. Here you had a nice run. Here a really, really nice run. Wait for this to get resolved before you get too heavy. Up volume was not good today. It was very bad. So a pretty candlestick. The environment appears to be changing a little bit. Cause to nibble. Okay, I'm with that. Test the market, see whether or not you're right. Let's just do a quick peek of the weekly Stokes. Just use a tight stop. Big down volume bars. It's under distribution. You know, we break down below the lows of the week. I would want to be out. So, interesting chart. Not out of the woods, but things may be improving here. Maybe. What is this, furnishings? It's a good sector right now. All right, do I have anything else? It's Humps, another name I like. Hey, it's Humps. UMC. Are you from New York? United Microelectronics. Oofa. This is setting up as a short. Monthly time frame, you have RSI above 90. Yes, it's a micro cap. I get it. Below $10, you can go higher. We're trading above the third standard deviation Bollinger Band. Volume's still good. Weekly chart. Whoa. Well, forget about the short right now. The opportunity was yesterday. It's going to come in. Big selling this week. Daily chart. What's probably going to happen here is that they may bounce it around another day or two, then they'll rally it back. If you're looking to short this thing, wait for a lower high. And ideally, you can open up a position on an anticipated lower high, then add more aggressively on a breakdown to a new lower low, below $8.30 per share. Me personally, I wouldn't be a buyer here. I mean, the money's been made. And I'll leave off with this, that on a monthly time frame, while you've had a pullback this week, I mean, this is a monster. This thing is ripping. Shorts have been getting squeezed. People have been going nuts with it. When it goes, it's going to go hard. So this is not going to end well. Be careful. Be very careful. All right. VEDI. I'm from New Mexico. Started my business at 18 and invested my profits into stocks. I rather learn from seeing charts and understanding them from lives like yours. Cool. Very cool. All right. Let's go to VEDI. We'll leave off with this one. What, did I type it in wrong? VEDI? Duh. VEDL. VEDL. I did type it in wrong. Very nice. Monthly chart breakout. We have a higher low. And a breakout. Weekly chart. Very nice. Very nice. Weekly breakout is strong. Muy bien. Daily chart looks good. Bullish stock. Very nice. You're going to have a bit of resistance up here, though, at around 8.30 per share. Otherwise, it looks very, very good. And with that, folks, I want to say thank you very much for joining me on another Thursday. I really appreciate it. If you want my 5 most powerful candlestick video tutorial, there's a link below. You can sign up for that. Please subscribe to the channel. Hit the like button. It helps me out with the YouTube algorithm. And everybody have a great remainder or great weekend. Happy holidays if I don't talk to you, and a profitable trading day tomorrow. Be well.